Welcome back here with the year-end special on money, money, money. And of course, we're talking about themes, ideas and products that might do well in the personal finance world in the year that's coming up. So we've discussed the equity side of it, Feroz. Now I want to pin you down on debt. I take your point. You mentioned that the bulk of the gains that were to be made because of the interest rate fall, they've already been made. But nonetheless, if someone wants to invest in a debt fund and hopefully earn better returns than a fixed deposit, what fund should he or she pick?
I would say if you have to capitalize on the movement of interest rate, a dynamic bond fund would be able to do justice. Like in the last couple of weeks when RBI actually kept the rates stand still, the interest actually shot up. A dynamic bond fund will be able to capitalize on this volatility. So point one, can you use a dynamic bond fund to get better returns, a couple of percent or 3% more than a fixed deposit on a post-tax basis? The answer is yes. Then if you can get tax efficiency in an arbitrage fund, which actually from a taxation standpoint works as an equity fund, but from a risk standpoint works like a debt fund. So arbitrage funds have zero dividend tax, which on the contrary is 28-29% on a debt fund. So if you have short-term monies, 1, 2, 3, 4 months, anything greater than 1 month, an arbitrage fund will be able to give you 1% more than a liquid fund and 2% more if you are in the highest tax bracket. So IDFC Dynamic Bond Fund would be one fund. On the arbitrage fund, the Birla Arbitrage Fund is one of the best funds which you can look at.
Okay, some debt fund ideas there as well. And now coming back to insurance, as you mentioned, one needs the right advisor to get the right products. But on the life side, perhaps some sort of products that someone could look at, and of course on the health insurance side.
The question is that you need to look up at your cover. An individual should look into the cover. It's quite possible you've bought some insurance earlier and you think it is sufficient, but your income has gone up, your liabilities have gone up. So maybe there is a time to look at your pure insurance covers. Now what you can look at is combining certain illness, critical illness, riders along with it, because there are very good combinations available right now.
So let's get some names going as well, and we're not of course promoting any particular product, but just some policies and some insurance providers which you think are giving a good deal for the money.
See, from the life insurance perspective, I think when you buy a life cover, the financial strength of the insurance company is important. You need to look at the claim settlement ratio. So if you look at all these things, the top 5 insurance companies, could be ICICI Prudential Life Insurance, HDFC, would be Kotak, Birla or SBI. When you look at these 5 insurance companies, you more or less get everything that you want from them in your life insurance portfolio, from especially a term plan perspective.
Okay, and what about critical illness and the disability cover that you said is also a must?
So critical illness is again, you could take it from a life insurance company again. Like for instance, the ICICI iProtect Smart actually offers you critical illness as a combination. And it's a very good combination that is available with an exhaustive coverage. So that is one that you can look at. Now looking at the medical cover, you buy a base policy from, again, the companies which do not have any sub-limits. There is one section of companies which actually restrict the coverage.
So again, some examples please of companies that do not have these fine print limitations.
Yeah, so you could look at Apollo Munich, Easy Health is one policy, a Tata AIG Mediprime, you could look at HDFC General Insurance, you could look at Bajaj Allianz. So these are the policies which do not have these kind of restrictions.
Gentlemen, before I let you go and enjoy your New Year's Eve, one personal finance tip for 2017. Feroz, anything that comes to mind?
Yeah, sure. Personal finance tip for 2017. I think from a tip perspective, I would say compromising on liquidity, which I think quite a few retail investors do, should not be done. So liquidity is the most important attribute of an investment, because a large portion of Indian wealth is in real estate, which is illiquid. Actually, academicians define wealth as that portion of your net worth which is portable, which you can take around and access on a click of a button. So I meet a lot of people who actually don't give importance to liquidity. I think that's the paramount prerequisite for an investment.
Okay, so keep those investments liquid, keep that in mind. Harsh, your tip for 2017?
Well, I think I'll refer to a proverb which says that when one door closes, the other one opens. Okay, so the problem is the investors do not look at that opportunity. So while in 2017, again, I continue to believe the interest rates are going to come down. So you have a choice either to look at interest rates coming down and keep cribbing about it, or you look at that as an opportunity in another asset class. Like we mentioned, if interest rates are going to fall, you will see growth in equities. So you have to look at that and you have to accept and embrace it. You cannot just simply sit over it and think that my deposits are not going to earn me enough. Inflation is going up. How do I manage? The government is not doing enough. Well, that is a perspective you could have as an investor, or take it as an opportunity to move your assets from possibly being dependent on fixed interest instruments to coming into floating rate bond funds, dynamic bond funds, or even look at equity as an asset class. So this is a tip. I think just let's not get too rigid. Let's not get cranky on that note of interest rates falling, markets not giving anything in 2016, and look at positively and participate in the growth of the economy.
Well, that's a fantastic note to end on, something that applies to personal finance and to life. When one door closes, another will always open. Gentlemen, thanks so much for taking out the time. Wish you a wonderful end to 2016 and a very happy new year as well. And that's the wish we carry to all our viewers. May 2017 fulfill your dreams in every possible way. We'll see you again in the new year.